Hey everybody, welcome back to Complete Trader Academy's daily review. Today is March 2nd, 2023. Let's hop right into it here. So we had some light news at 8:30, not a factor, but candle of today here did similar to what we thought of. So I forgot to mention that we're gonna retrace and then head up for that high, but it did, and they did not decide to go down and take out the lows. They decided to keep this a little bullish and come up to this point, get into that wick of imbalance right there, getting into that imbalance of wick right there. And this is still a target, this daily massive imbalance right here. So let's go into a 5-minute here. Take a look. Beautiful day. Very, very obvious or predictable, we should say. So we opened up here, gapped, came up, took out the previous day's high right there. See that? Right when we closed. Shot down, was bearish, came into this. I'm sorry, let me go into an hour. Apologize. So we closed yesterday. We peaked above, got into more of this imbalance here. Didn't get quite 50% of it, but pretty much close to it. Rallied all the way down, took care of all the long coverings here. Covered longs here. Came in, came down, structured, came into this block right here. This is what held as support for the day. And the low of the day, which would have been 3 a.m. Eastern time in London. All right, and then what do you expect? You expect order flow. So we retraced and we came right back up. Big juicy high that we already took out right here. Well, I was talking about here. And then this is the next target. And on the 15-minute, you're going to see that we mentioned this yesterday about this big imbalance there. Sure enough, took almost 50% of that to the T. All right, so let's go into a 5. In the 5-minute here, you're gonna see here order flow, high, higher low, higher high, higher low, right? So when we broke above here, another thing I forgot to mention yesterday, when we broke above here and made a higher low and then made a higher high, this was order flow. We had another break right there. Sometimes, see, I don't have to mark all this for me, but I forget sometimes I got to do it for you guys, right? But right there, obviously, that was a new break. That's a higher high. This is simple order flow. This is simple structure. This is, anyone who doesn't say that you should not be following structure is also just, full of shit. So other than that, this is that 1 hour block right here that we tapped into. It's 3:30 in the morning, though, so I'm not even awake. I'm in East Coast time, so looking for order flow to come back. We have this at 8:30. We make another high. We're shaking out. Now 9:30 comes. We take out the liquidity here. That's a good, because I know we're coming for this high, and I know we're coming for this high. Not so much, but I'm at least for sure coming to this high and back to this gap right here. So this is a moment where I've got to bias 100%. If you watched yesterday's video, very key, I was telling you that we took out liquidity multiple times on these lows. And again, the last time right here. So I'm expecting a higher low. And I'm expecting another higher low today. So this is not all the time do I like 100% no, but I do have a good idea. You see, I do these hindsight videos, or these prediction videos, I should say, the day before, and and this is to show you, actually they do go where I'm telling you it's going to go, all based off of the algorithm's interests, right? So, and logic, as far as structure, as us being at the bottom of this swing, now we're going to get some type of retracement, even if we're going to continue to break right now. Yesterday, I made it very clear that this is a lower low, this is a lower high, this is a lower low. Where's your lower high? Well, I mean, just closing your eyes, generally going to be coming somewhere about 75% of this lower high to lower low, right? Somewhere in that range you're going to be. And sure enough, you got a big ass. What are we on the 5-minute? I'm sorry, I should have went to the 15-minute. And on the 15-minute, you will see that we have that massive imbalance. Sure, look at the price, comes right to it. Not a coincidence. Taking these highs out, beautiful. And that was your bias, and you had to stick to it. Even when you saw these major pullbacks, these were difficult pullbacks, guaranteed difficult pullbacks. But I'm trying to hold it and forget it. Is my game plan. Looking at a higher time frame. So 930 comes, takes out that previous low that we made, and then it starts to make order flow. And I need to go on a 1 minute here. You'll see here, and it wasn't clean, it wasn't choppy, it was kind of choppy, but you'll see that when this block, this bearish one, got established, we were going up above it and stabbing into it and holding. Then when we made this break up and we took out that high, I didn't see it as taking out the high. You're looking at it as order flow. So that's a break of structure. Now you got an internal higher high and you're going to make a higher low. It retraced deep enough right back into that block. I'm automatically a buyer right there. Now I could have put my stop loss here. I decided to make it right here because I knew what kind of day it was. So held definitely. And then you could have been a buyer again right here when it taps into that block. Let me go on a 5 minute so you can see it. Right there. See this block right there? Comes right back into it, taps, holds, breaks above, comes back into this imbalance. You could have been a buyer again there. Price rallies up, comes and taps the actual gap opening of the day. You could have been a buyer there, but that's a big range of an imbalance to play with. I wouldn't have touched that. And then price came up above this candle, tapped it back in. You could have been a buyer there. And then here was another buy, big imbalance there. Price taps into it. I mean, man, we do this every day, and it's the same thing every day. I swear. So target 1 here, target 2 there, and I mean that would be a major final target if you were to hold, but that's not even going to happen. Generally 50% of this imbalance is where you're looking for your final target. I was happy as soon as it tapped it. As soon as it tapped that imbalance, I was good. But you look at the candle, it's still rolling. You see what I mean? Just you let the momentum go here. When you expect it, when it breaks these levels, you expect momentum. You expect momentum here. So to get to its target, especially at the time of the day. All right, so where were we at here? Let's look at, this was some more confluence here from yesterday and rolling into today. When we wake up, we see that we have a divergence. We have NASDAQ coming down, taking out lows. We have ES taking out lows. And we have the US 30, Dow Jones making higher highs. This was your point of interest to say, hey, I'm going to continue. Well, they're leading. Dow Jones is leading the trend. And I'm going to follow higher low, buy each higher low, and be confident in that because it's this divergence here. As far as the dollar was not as helpful as we would have liked. It was rolling through it. It was helpful definitely at 1 o'clock. And then you'll see at 1 o'clock this shift here. When you were here at 1 o'clock, that's when we shifted right here. You see, when you were at 1 o'clock right here and we're stuck here and we see that the dollar is going to just shoot down like this because we've reached, the dollar has broke that previous high, and then you get this big ass candle right here. This is now 130. When you see the movement coming down and you see all this imbalance in price, and you know you're going to kind of come back somewhere in here as far as a higher low for the dollar, well then there you go. That's when you're confident in the price still going up, and that was when it was helpful at that moment. But you had to have not used the dollar pretty much in the day. It wasn't clean, so I'm not going to rely on it. It's more of like a third base indicator where I would use this as a second base indicator. Vice versa, I could go more. It could take each other's place. But my first indicator is my analysis, is my idea of what's happening here, because I can see what's happening here. You see what I mean? As far as the lower low, lower high, this is my asset I'm trading. This is what I'm looking for. So this is going to take predominant value over anything else. We don't use indicators. Even down here, we've rarely used any of these, and they're rarely right. But if you follow them, they are right sometimes. So, but I mean, this would be like a fourth situation. The only time I use this down here is when it's really, really oversold or overbought. But even then, it's not really that reliable. But you know, again, a piece of confluence that you add. So beautiful day, ran right to it. I'm sure you're gonna know what I'm gonna say for tomorrow. Now we can retrace back. We got news tomorrow, so we can just run right into this. Okay, or we're gonna similar day today. We had a retracement and then we made a rally and then we settled. Well, we can do a retracement, rally, and then settle as well for this next coming day, tomorrow, Friday. You know, or they dangle this carrot and then just sink. I mean, if I'm not seeing any sinking happening, we're coming up here, right? All right, so hope this helps you guys. Take care. God bless.